We are live. Welcome to this market update. My name is Vinnie. This guy over here.
David Wright. I'm live in the flesh, and I'm not a robot, and I'm not AI driven.
Well, that's a good thing to know.
I'm not a chat bot. In case you guys are wondering if I'm a chat bot, that is incorrect. That is a majority of customer service when you call in now, though.
Yeah, but there's some there's some good ones right now. But we're not totally proud of it. Before I forget, please subscribe if this is your first time here. We try to keep this really simple, under 10 minutes, give you kind of the facts of what's going on in the real estate market in San Diego. Please share this. If you have questions, comment, whatever you might do. We want to try to keep you informed. I got a clear going below, giving you the active properties and current pending properties. Pending and active are trickling upwards. We've actually seen the median detached price go upwards too. We also had the Fed meet yesterday, and David's going to love talking about that.
Well, we can go into that. Actually, did I have?
Well, David's pulling it up. What I'm pulling up right here is a platform we use all the time, just giving you kind of idea of what rates are looking. These are not the rates across the board because you got to remember every lender, can offer their own rates. They're also it's how much they actually want the files, the underwriters. There's different entities that want more conventional loans, more FHA loans, VA loans. So the numbers do change, but this kind of gives you a ballpark idea of how the market is. But all right, talk about the Fed.
All right, sorry about that. My Wall Street Journal's in my kitchen, so I was going to grab it, but it's out there. So, when you take a look at things, the Fed met the other day, and they basically said they're not going to do anything, which if you've been paying attention to us, this was predicted. We knew they were going to do nothing. And even though the market is more volatile now than it's been, we have more listings coming on. The thing that the Fed is waiting on now is, the rate of inflation is now back to 2.7 from 2.5. But the reason being why they're not worried is because all this is because of tariffs. So tariffs is not really inflation. Tariffs is something that's temporary. So you really need to understand the fact that a tariff is temporary, that will either be passed on to the consumer or not passed on. Majority of the time it is passed on to the consumer. So the Fed took a look at that and said, hey, overall, we're still plugging along. The thing that they did mention is they still think that the labor market is strong, except for all those people who are no longer going to be employed by the government, which leads me to believe personally, when you have all these people exiting these government jobs and have to go into more of a free open market, that's when I think you're going to see the ramifications of this 4 to 6 months from now. With that being said, the Fed also noted that unemployment went up to 4.4% from 4.3. And if you've been paying attention to our show, I've been telling you, you want unemployment to keep going up if you want interest rates to come down. So that sucks that people lost their jobs. It sucks. But the unemployment rate going up is going to help you with your mortgages. So that's another big bonus. And, the other thing that the Fed talked about is they said it's not secured, but literally 11 out of basically like 18 members are already factoring 2 rate cuts later on in the year. So does that mean rates will go down? No, it does not. Again, if you've been watching this show, you know that when the Fed cuts rates, it doesn't mean mortgage rates go down that day. In fact, it's usually factored in 2 weeks prior. So I want to stay on course with saying the higher unemployment goes, the better you're going to be for mortgage rates. And ultimately, I still believe now what's going on with all these jobs that are being eliminated, that is going to naturally bring down interest rates because it's going to make our debt more desirable, especially our 10-year treasury bonds. And when that debt is more desirable, more people buy it, which pushes down the yield, which pushes down mortgage rates. So to sum it all up, we are slowly moving a little bit down. And as you looked at those rates that Vinnie pulled up right there, yes, these are for, 80%, 90% of your retail lenders and banks. So they're a little bit higher than what other people can get for you. But as you can see, just from 2 weeks ago, before you're at 7, now you're at 6.71, according to this side, which is credible. And your other stuff, VA 6.15 and FHA like 6.13. But if you talk to other good lenders in the marketplace, they're really going to get you down on the FHA and VA down to 5.75 or 5.625 APR. Let's say add an eighth of a percent to that. But overall, things are trending downwards. If you're a home buyer, unfortunately, you don't want the rates to keep trending down because home prices will go up. If you're in the market now,
and we've already seen that. If you watch our last episode, you know that we kind of already talked about it with the idea that people have, I mean, I forgot the number, but it's a pretty high number of individuals that have a 3% interest rate or lower right there. And right, the average person that owns a property is trying to move in every 5 to 7 years, right? That number might go up a little because it's harder to move. But you have people on the fence that want to move but don't want to give that 3%. The longer they wait and the closer it gets to 3%, it's going to be easier for them to go, okay, I can get a bigger house for a 5% interest rate and give up my 3%.
So right? You know what's interesting, Vinnie, when you mention that, the data has been analyzed and it is statistically proven if interest rates get to be 5.875 to 5.75, that is the ultimate sweet spot where consumers start making major moves. So unfortunately, if we get down to 5.875, I say that unfortunately because all of a sudden you're going to have a lot more sellers jump into the market, and the buyer pool that's been waiting is also going to jump in, and then you're probably going to watch prices go up. So the old saying still holds: if you buy when no one's buying, you usually end up better. But if you buy when everyone's buying, you always pay more. So you go back to that Warren Buffett analogy where that guy's like, yeah, when everyone's selling, I'm buying.
And I'd probably say too, I mean, the price points that have been really aggressive currently have been about like $1 million and under, $1.1 million, $1.2 million, that kind of ballpark, right? The higher you go up in price point, that market hasn't heated up as fast as the other markets, right? So as rates go down, it's going to be more palatable because the divide from basically renting a $2 million home compared to buying a $2 million home are going to be kind of coming together, where the divide for renting a $700,000 home compared to buying a $700,000 is fairly comparable, right? So the closer we get with rates to go down to that 5.7 that Dave was talking, the more of that higher end market is going to jump into the market. So if you're looking at the higher end, right, a 1.5, 1.8, 2.2, you might want to look at doing it now and then look at the idea of refinancing in the relative future. If you're waiting for that 5% or so.
I'm going to send you something really.
Well, we got like we talked about when we first started. We only have a short window of time, so we got a minute and a half right now to dissect.
Here you go. Here, take this. I'm going to send you this. Post this on the screen because I want people to see this. This is really interesting.
Right. Send it right now?
Yeah, hold on. I'm going to send you the link. There it is. So post that on the screen because for a lot of you out there who have been looking at certain condos and wondering why they don't sell, or listing agents they don't know why their condos aren't selling. And the listing agent's like, I don't know why my condo won't sell. It never sells. Well, here's something to look at. And
you sent it. Oh, I thought you emailed it to me.
No, I sent it on the chat.
Yeah, here we go.
So this was a very interesting article because I see a lot of condos on the market forever, and I see a lot of listing agents go in and out of escrow because they fall out with lending all the time on their condos. And here could be one of your potential reasons why. Vinnie pulls this up. Oh man, we're running out of time, man.
I know. We got 50 seconds. Oh my gosh.
There it is. There it is. Quick, right there. Look. A secret mortgage blacklist is leaving homeowners stuck with unsellable condos. So this article is actually really good, and you dive deeper into it. It basically shows that there's a lot of different collusion with larger lenders, banks, and institutions who are looking at condos that are not what's called warrantable. They're non-warrantable, and they're basically going, hey, we're not going to lend on that. And if you're in our friends club, a couple of us, let's all protect our assets and not lend on these. So that means those deals of those condos will be non-warrantable, and they'll be sold on loans that are called non-QM at higher rates and big discounts. So if you can find those as a buyer, you'll score. That's the moral of the story.
And there are like that. So give us a call. Oh, shoot. Let me see. The last minute clicker. My number is 858-345-7829. Davis' number is 858-349-74668. All right, that was it. We got to go.